Wow, we're back.
I think the Fed screwed up by allowing it to the zero interest rates to go on for too long. I think we're just beginning to pay the price for that. And it'd be nice to say that it'd be great if the Fed got lucky. I've been around for 50 years and I've never seen the Fed get lucky. All I've seen the Fed do is mistake in terms of not acting fast enough.
Super bearish.
Wait,
you know
a real estate guy is not happy with the Fed?
Do you know who that is? Michael just said it's a real estate guy, so it is.
Is it Zell?
Yes.
Zell, very good. What were you going to guess?
I was not going to guess.
You going to say Wilford Brimley?
It did sound like
This old house?
Sam Zell talking to Sarah. He's a doubter of the soft landing thing that I guess everyone over the last 2 weeks has become starting to believe in.
Yep.
He doesn't see it going that way. I wanted to give you guys a big introduction. I'm so happy that you're both here together. I'd be happy individually, but this is just awesome because you guys are friendly, and we've kind of been to a lot of the same events over the years, all of us together.
And wait for the podcast listeners. We've got 3/4 of the audience of the host are bald today. It's a win.
Brought to you by
Bring
Rogan.
it, Josh.
Yeah, first
And
time.
I'm trying to catch up.
First time.
As fast as I can. All right, let's start with Dan. Dan Russo, I wrote you an introduction. You are the Director of Research and a Portfolio Manager at Potomac Fund Management, an investment management and research platform for financial advisors. Prior to Potomac, you spent time at Chaikin Analytics, Susquehanna, and others, including time on the floor of the New York Stock Exchange. And Dan, you're also teaching technical analysis at Baruch College in New York City. Welcome to the show.
Thanks for having me. It's great to be here.
We're so happy to have you. Jay Woods. Jay is working on something new. So currently, you're on the board of directors of the CMT Association. Most recently, chief market strategist for Drive Wealth Institutional at the New York Stock Exchange. You've been on the floor how many years?
30.
Okay. Most of that time you were with Goldman?
Correct.
Okay. Well, Goldman Sachs bought
Spear, Leeds, and Kellogg.
Spear, Leeds,
in
Kellogg.
2000.
Okay.
Great
very
deal
cool.
for Spear.
While at the New York Stock Exchange, you reached the highest level elected position on the floor as executive floor governor. And you've been known to give a nice tour, including to me and my lovely family.
That's right.
Which was pretty epic,
Yeah.
which we could talk about. Tony Dwyer officially refers to you, shout to Tony, as the NYSE, the official NYSE greeter. Scott Wapner recently called you, quote, the mayor of the floor, which I would agree with.
Mm-hmm.
And you also introduced my kids to Sports Illustrated supermodels.
Yeah.
Which is true. I guess we brought the kids down to the floor during February break.
Yeah.
And that's right around the time they put out Sports Illustrated. You're nodding. I know when you know that issue comes out.
I do.
Okay. It's every February.
No, because I was on the floor as well. I remember they would always bring the models down to ring the opening bell or the closing bell.
Do you know why it's February?
Well, they actually just moved it to May because swimsuit season. But it was always February for Valentine's Day. That was when the party was for years. Recently, they expanded. They got a little more diverse in the people that are in the magazine, and they moved it to May. So we haven't seen them down there this time of the year, unfortunately.
Yeah. Well, so hold on. And then, Dan, you're saying that Jay got your daughter on TV?
He did.
See. We have these pictures. John, put this on screen. Let me see.
Right there over Quintanilla's shoulders.
Oh, look at that.
That's my daughter. And Jay, not me.
Let me see. Let me see the next one.
And there they
that's
are
awesome.
hanging out on the set. Now the younger one got
You know
really
how much
upset.
money she cost me on Zillow?
She's the
She
worst.
was dead wrong.
She was dead wrong.
Okay.
Absolutely.
How old are your daughters?
12 and 8.
12 and 8. Those were the days.
Yeah, it's fun.
I have a 16-year-old daughter now.
I have a 17-year-old
If
stepson.
only I could go back. If only I could go back in time. All right, that's awesome. So how long have you guys known each other?
God, I don't know.
Long time. We overlapped on the floor, actually. I left the floor in 2007, so we
Okay.
overlapped there briefly. So we know a lot of the same people, but it was kind of more when you got involved with the CMT Association that we really became closer.
Yeah,
tighter.
it's the technical analysis bond that brought us together. I've overlapped your time on the floor, but we were both
we didn't work
working
in the
for
same room on the floor. You
market
guys
makers.
were in the garage.
Yeah, we stood in one place all day. So there were 5,000 people at one point down on that floor, but I would only know like 500 because I just stood in one place. People came to me.
But you had a very specific, the last 5 years or so, you have a very specific spot on the floor.
Yes.
You are right when people walk in.
I was. I
You
was
were the first person that people pass.
Every guest that comes down those stairs from the CNBC, when you get your hair
Yeah,
and
yeah.
makeup done,
Dude, they
it
should
looks so
build you a
pretty.
statue outside the NYSE, like,
They gotta
like
build. They
Shaq.
gotta
Next
build the
to
cash.
the fearless girl.
They gotta build the Cashin statue first.
Yeah,
And
the
then
Cashin
and then-
statue.
He does
first.
deserve a statue.
They could put you on top of the bull.
There you
There you
go. That would be fantastic. No, Mr. Cashin deserves all the accolades. I just say hi. I'm friendly to people. It's pretty easy.
So you and I met through the floor, but yes, CMT. Let's talk about that for a second.
Sure.
There's chartered market technician. That's like we have JC on the show a lot. That's
Good friend.
They still like him there, or has he been excommunicated? What's going on there?
JC's a lightning rod. He brings attention, and he's my favorite guest on this show.
He's my favorite CMT. So
Yeah, he tells it like it is, and some of the older guys in the organization may not think that's the best way of going,
Yeah.
but he brings eyeballs to us. He has been such a strong advocate for the organization. We're having our 50th anniversary in April,
Yeah.
so if you go to the cmtassociation.org, you can check that out.
super respectful of the
Yeah.
CMT organization, but they should kiss JC's ass.
Yeah, no, he's
I'm
still
just
very
telling you.
involved. And,
very involved.
We're chapter heads of the New York chapter, and,
Yeah.
and we're gonna have Brian Shannon. I didn't even tell you this. Brian Shannon's coming in early April, promote his
Shout
book.
to
and
Shannon.
We're gonna
Awesome.
have some drinks. You guys will be invited. And for the 50th anniversary, we got the floor of the exchange. We're having a big party. Some nice speakers lined up. Probably not allowed to say.
Did you get Michael Batnick?
We're working on it.
All
We're
right.
working. He's tough. He's
All right.
tough.
April's tough for me.
If I get invited, I'll come to that.
It's not exactly Miami in February.
That's
No,
true.
not quite the same thing. Are all the guys that trade on the floor quasi or full on technicians, or not necessarily?
It's a mixed bag. There are people that go with their gut. There are people, most people is everyone's.
How are they doing?
Yeah,
If you're not a technician, what are you trading on?
What are you right? Rumors and innuendo.
Well, I
Well,
think it depends
you-
on
go
your
ahead.
role, really, right? If you were a market maker, you kind of knew your stocks back in the day. I mean, I left the floor in 2007, but the group of stocks that I was assigned to trade, I knew those stocks inside out and backwards from a trading perspective. Right, I had a rough idea of what they were doing. I traded a huge mining company that was
You knew the
based in
news
Australia.
on those stocks.
Of course, you had to know the
Had
news
to.
because the news was generally out before the open. And this is pre-technology becoming as prevalent as it was. I mean, we were the ones who set the opening price based on supply and demand. All the order flow came to us, right? And you would see an imbalance. If you had a large imbalance to sell, well, you were going to take the stock lower until you found a point where supply equals demand, and you would open the stock. Obviously, that would be predicated on the news a lot of times, earnings, takeover announcements,
But
things
you
like
knew,
that.
like, if a certain news story came out, a certain type of headline, you knew, oh shit, here comes the buyers, or here come the sellers, or who knows. But like, you had a sense of that ebb and
You had a
flow.
sense, but plus you saw the order flow. I mean, what was our market share at one point?
When I started, it was
85,
85%.
90%?
85%. So
Right. What is it now?
It's
Less
25%.
than 30.
And mostly open and close. That's where the block volume comes in. Those are the two most important trades of the day. So you want a human involved in those at all times. So
Okay.
Yeah.
And then IPO stuff is still important. The human
what's
element.
an IPO? I haven't seen one of those.
You might see one next year.
No, they're
later
coming.
this-
They're
later this
coming.
year.
You don't see a lot of IPOs with the VIX over 20.
No, the
Right.
pipeline is robust, and
It's growing more
You
robust.
sound like a
Yes.
banker.
Yeah, this is the line. Stop. Let me-
Pipeline is robust.
Yeah, this-
Wait, so I was on the floor for a few big ones.
yeah,
I was there for Alibaba.
the biggest.
I was there for Twitter.
Yep.
I'm trying to think. There were a few. I was there for some hilarious shit too, like Fitbit.
Yeah.
They put a giant fucking treadmill, like 50 people could run on it at once, in front of the New York Stock Exchange outside.
Yeah.
That was pretty epic.
Yeah, you missed the Gateway Cow back. That was before
was-
you
that was-
when
that
they
was
had
before
to
my
follow
time.
it with a giant pooper scooper.
Oh, they had a live cow. Did it come into the? Did it come in the exchange?
The chimp was there. They had a lion for a gold company up on the podium. Dick Grasso was the greatest. He brought in some of the craziest things you could ever
See,
imagine.
they got to do more of that. Like, is there a committee that says, you know what? Let's have some fun with this.
Yeah, well, they're trying.
I think they've
We
been
just
doing
gotta
it for
get-
years. I mean, they turned the opening and closing bell ceremony into the greatest promotional event
Yeah,
in financial markets.
But it because you know why? Like, you know why I think that's important. Like with ESPN, you have great visuals.
Yep.
So for financial media, you don't have highlight reels like, Dan Russo slam dunking a basketball. Like that doesn't exist. So having like a spectacle, not because it's obviously it's silly, but just giving people good visuals, I think promotes investing and just generally speaking. I think there should be more, not less.
It does. Well, the stat about the bell is, and it sounds crazy when you say it, but it's the most watched event on a daily basis throughout the world. And you think about it on Wall Street today, ding, 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 ding. They're showing you. You may not realize you're watching it, but they're showing it. And then
they're showing that clip on newscasts across
everywhere.
the world.
And then, unfortunately, if the Dow closes down 1,000 points, everyone still has to sit there and clap as they're cheering for them ringing the bell. Those are awkward. Yeah, those are awkward. But we've seen we get celebrities. We do a lot of charity work, a lot of charity bells, a lot of promotion. ETF space has been huge. So you're seeing a lot of ETFs. Katie Stockton, friend of the show, friend of ours, recently just rang the bell for her ETF launch. So it's great. Great platform.
I love it. All right, we're going to get into, we're going to start with...
No, we're not.
Yeah, we are.
No, we're not.
Starting with Bitcoin.
No, stop.
Yes, we are.
No,
It hit 25,000.
Stop.
It's not the biggest story
Bro, why are you
today.
calling it Bitcoin? Well, that's so lame.
All right, fine. Bitcoin.
No, you dropped the Sam Zell clip and then you just left it hanging. Can we talk about that?
Let's go into that.
All right. So there was some news this morning. PPI came in hot. Market opened. I think NASDAQ was down 1.3 at the open, something like that. But I just want to talk about the possibility of a soft landing that Sam Zell is not buying. So the NFIB, the National Federation of Independent Businesses, does a survey where they asked the single most important problem. Obviously, it was inflation that spiked from 0% of respondents up to 40%. That is now back down below around 25%. Goldman came out today and said, we have cut our subjective probability that the U.S. economy will enter a recession in the next 12 months from 35% to 25%. 65% is still a consensus somehow. And the Citi U.S. Economic Surprise Index is its highest since April of last year. So if anything, there was a good analogy about like that we were going for a soft landing, but we might not land and we just might reaccelerate. It seems to be that the news, at least on the economic front, is getting hotter again.
But then how...
Or less bad.
But like how is it possible? How many rate hikes do you have to do for these things to roll over? Do you have to go to 10%? Like, I don't even understand how we could have a reacceleration. Could we just say like the data? Could we just say like the data is misleading if you look at any 1 month and you have to just think in terms of 3 months,
but dude,
6 months?
it's not just it's not just the data that's so good. The market front ran the data. The market continues to look good. Industrials, semis, and home builders, three of the most economically sensitive stock groups, look amazing. Like the news and the price action confirms bull market. Like I don't know why we're like afraid to say it.
No, I'm not afraid to say it. I would have guessed that we would be in a bear market.
Oh, me too.
Yeah, so we're really in the same place.
happy that
We're
we're
in the
not.
same place. We're in the same place we were 2 years ago.
20 this time 21.
Yeah,
Minus
the S&P.
Minus like we're in the same
the
place as the
S&P
S&P
level.
Yeah,
Right?
yeah.
And what fascinates me is the amount of conviction on both sides. I mean, people who are bared up have a ton of conviction. This will happen. We will go into recession.
Yes.
The market will correct 30% from here. And the bulls have just as much conviction. And then you look
Do
at the
they?
chart. I think so. I think the hardcore bullish people do.
Well, they always will, right? Like that.
I mean, permas are permas, right?
Yeah.
They're always
Yeah,
going
yeah.
to do their thing. And that's kind of who I'm talking about
I think
here.
it's much harder to have a lot of conviction in the bull case, even though I'm saying that like then,
Which is backwards because you should have more conviction in the bull case because the market has a tendency to go up over time. And I always like to say this, when I was on the sell side, right, worked with analysts, strategists, things like that, there's career risk to being bearish and wrong.
Yes.
Right? If you are vocally bearish, whether it's on a stock, whether it's on the market, and you're wrong, nobody forgets that. You could be bullish and wrong, nobody cares.
True.
You know what the mitigating factor to that is? Most of the perma bears don't actually manage money. So
Agreed.
there's very little actual disappointment based on them being bearish. Like there's obviously some famous hedge
Reputational
funds. Right, but the thing is the media loves them because
They sound smart.
Well, no, they sound smart and the pronouncements they make for great headlines.
Yep, it's clickbait.
So they almost have like a welcome mat that's always out for
yeah,
them.
because bulls sound naive. You don't see the risks, right?
Exactly.
Yeah, no,
All the
right.
time.
Only you see the risks. The rest of us are complete idiots, and we have no idea what we're doing.
All right, so Dan's got some charts that he brought up, but fine. Let's talk about.
Well, can we
Bitcoin.
just? I didn't want to do like 15 minutes on it. Can we like mention the fact that Bitcoin is at a 6-month high?
Yeah.
That's because it's an inflation hedge.
Clearly, that's the only answer that makes sense.
Well, seasonality, February, it's the best performing month.
All right, so what is this? Who brought this
that
chart?
true?
Who brought this
Oh,
chart?
right here. It's, last 10 years. Look at
Wait. What is going on here?
February. It's up like 9 out of 10 months, 11.7%.
Hold on. So
gain
February
on
is
average.
Swimsuit Illustrated, Swimsuit Sports Illustrated
Valentine's
month.
Day that you suck at.
Valentine's Day and
Yep.
Bitcoin. So literally, it's higher 90% of all months. Is that what we're showing? But
9 out of 10. Yeah.
And what's at 11.7?
11.7% average gain.
But when you show this is tongue in cheek, or you?
It's tongue in cheek, and it's what technicians do.
Package it.
Yeah, it's seasonality. Look,
Seasonality on 13 years of data.
Yeah. So, small sample size.
Can I put like a performance fee on this and sell it though?
Do whatever you want.
So
definitely.
I saw a good thread on why because yesterday we were like I didn't even see the news. I said, why is Bitcoin? What happened?
Yeah.
And what was the news that you told me?
The Bitcoin Fed lowered interest rates.
So no, there was a coordinated crackdown from the government on ramps and off ramps, and they're going after stablecoins now, and it's potentially problematic. So somebody had a good thread on this. This guy, Rich Rosenblum, said, the sharp rally from 22 to 25K yesterday struck many as unintuitive. Why would Bitcoin jump 10% immediately after a fresh strike of the regulatory shock and awe campaign? He said, one, the threat of regulatory action against stablecoins potentially scared capital into Bitcoin and ETH, i.e. a reverse flight to quality, as holding a stablecoin earning zero already looked bad last week. Once building a probability drops to zero, it's tempting to move to other crypto assets that are less reg and credit sensitive. I thought that made a lot of sense.
It actually does make sense.
I think it does make sense.
Are you laughing?
Yeah.
Why?
I never would have thought of that.
I thought it was earnings. I didn't know why.
You thought it was Bitcoin earnings?
Yes.
I actually had a good explanation.
Okay.
Which is that the Republicans came out with a bill in the House to make it illegal to stop Fidelity from including, not just Fidelity, stop 401k plans from including Bitcoin as an asset class.
But that wouldn't pop at 10%. This would. He's right.
Yeah,
Well,
I think
who
he's
knows
right.
what pops at 10? Yeah, no, I assume this is
well,
right.
this is
did
right.
include a weekly chart, a 5-year weekly.
Okay, let's throw it up.
And technically, it just broke out. I mean, look at that. We're going back.
You know what? Let's do it. Let's do this right here, right now.
Yeah.
I hate diagonal trend lines, and I will defer to the technicians. But there's no price memory there. It doesn't do anything for me.
I hate trend lines.
Ooh.
What?
I hate trend lines.
Even horizontal ones?
Horizontal ones. They're subjective.
But
You and I can look at the same chart and we can draw trend lines and have completely different trend lines on the chart, right? They're subjective. Now there's some rules and about, from the old CMT curriculum about how you're supposed to draw them. But, to me, I'd rather use the moving averages. What is a moving average but just a dynamic measure of trend?
Oh, interesting.
So, you could start, who's to say that that's the right trend line to draw? Do you connect highs? Do you connect closes? Do you connect opens? There's too much subjectivity.
What is this trend line though? That's intraday
that's
price highs.
Weekly.
Price high,
Intra-week
weekly
price
high, weekly low. And the only thing I want to point out is something's changed. The trend is broken. Do you buy and sell at every trend line? No, you don't. You want to have more evidence. But right now, something's changed, and it's at 25.2 is resistance.
Something changed.
If you go back.
Yeah.
What is the red line? Is that 200 day?
That's the 200-week moving average.
200-week
So,
moving.
there's
Which is still
points
rising,
of
by the way.
interest, as we like to
That's
say.
crazy.
But something's changed, and it looked like it wanted to go much lower when it broke down during the whole FTX thing, and it didn't. It made one low and then a series of higher lows, and then broke back out.
Pre-FTX, which was in November, Bitcoin was at 23,000-ish,
Correct.
23,000. It's 25 today. It's unbelievable.
It never happened.
Yeah.
Yep.
How is it that the 200-day never turned
No,
down?
200 week. 200 week.
200 week.
I mean, that's so slow
I can
moving.
give you a daily, but this
All right,
this was just
I'm
to
stuck on 200
kinda
day.
show. Yeah.
200 week, I get why it's
I
never
know.
gone down.
Yeah.
All right, so Dan, we've got some of your charts. Let's talk on it.
What do you want to talk about? Which one?
This is what you were just mentioning, that bulls and bears both have a ton of conviction.
Yeah, I mean, like we were talking about, bulls and bears have a ton of conviction, but
John, that's the first Potomac chart.
the S&P 500 has gone nowhere for 2 years. Now, obviously, there's been a lot of volatility around that, but I don't know. How do you have a ton of conviction when, I mean, just look at the past year of trading.
Right in the middle.
Just right in the middle of a complete slop fest, right?
Correct.
That's a technical term.
Which-
It's in the curriculum.
The market's without trend.
It is. Well, no, the trend is sideways. Sideways is
Yeah.
a trend. There's
Sideways
three trends.
direction.
Yeah,
Yep.
I guess.
Right. So, you want to have a ton of conviction. You want to speak like things are going to happen. I love when people speak in absolutes. The market will rally 50%. It will. Well, yeah, maybe.
That's such a great point. The thing that I've been saying to Josh almost seemingly every day, this market is strong. So I'm not saying that things can't change, tomorrow. But for now, even look at today. The market gapped down a lot. The market wants, I don't want to say the market wants it. The market is going higher.
We're buying dips. We were just talking about this.
The mentality has changed. We're
I see
buying
an
dips
inverse
again.
head and shoulders. Do you want to throw me out the window? Or
No,
It's not a solid neckline to
not
me.
solid.
Yeah.
And you need to see volume.
I thought I saw a head and shoulders.
you want that volume to confirm the break of the neckline?
It helps. It
Okay.
helps.
I don't believe in that shit either.
Well, I'm not a big volume guy because volume gets skewed 4 times a year when you have expiration, like those and rebalances. So to me,
But getting back to what the market is actually doing. So this morning, you had PPI that came in hot.
Yep.
You had one of the Fed officials saying that she was advocating for a 50 basis point rate hike. The market this morning took that as very hawkish. And 6 hours later, the close is still 45 minutes away, but like dips are getting bought. For whatever reason, they're getting bought.
We bought the CPI dip yesterday also.
Yeah, we have. And the retail sales number didn't scare people.
So what would you say? Like, this is bad news is good news, but in the other direction? Because remember when we were rooting for weak economic data because, like, that would prop up stocks because people would think the Fed would be done. Now it's like, wait a minute. Now bad data is strong data, and we're still rallying on that? It's almost as if
no, because
buyers and sellers don't really care about
the narrative
these
is changing. The narratives change. So the story is actually we're avoiding a recession. The economy is reaccelerating. People were too bearish. People got offsides, and now it's positioning.
Okay,
That's
I get
fair.
that.
Mm-hmm. I mean, 2 weeks ago, the most consensus view on the street was that we were going into a recession, right? I mean, it was literally the most
What
consensus
if we
view on
had
the
a
street.
recession, but it was in the stock market, and it was a correction of valuations and an earnings recession?
We've had 2 quote-unquote bear markets in the past 3 years.
Yeah. So, like, what if the recession was stock market recession? Like, that happens.
Of course it happens.
So,
But there's so many textbook definitions. I say this a lot. Put an asterisk during this whole COVID era because the
Very good
swings.
point.
Yes.
Yeah, this is the steroid era
Yes.
of stock trading, and we had the worst decline ever during COVID.
Fastest bear market, fastest recovery.
Exactly. And now we're seeing it, we had it just in eggs. We had it in chicken. We had it in gas prices. Lumber. Remember lumber? Rand bought the high on that too. But
we had like a 6-week recession in the real economy.
yeah, and things
These things
happen
don't make sense
so
at all.
quickly. And now people are rooting for the recession because we know the stats. We know, all right, 2 consecutive quarters of negative GDP growth. All right, that happened. We're going to have a recession. Didn't happen. Yield curve inverted. All right, when was that? It was about a year ago. Usually the average is 12 to 16 months after it inverts.
Yeah.
You hit recession. So the sweet spot, if we are to hit recession based on those stats, are April to July of this year. So that's what a lot of us look for in it, but then it's the NBER who makes the decision, and the job number has been phenomenal, even though we hear the headline, all these layoffs.
The NBER guys can go on vacation right now. They're not going to miss anything because
They backdate the recession anyway.
Yeah.
And then, I mean, these people have shown the stats out there. These tech companies massively overhired. So, I mean, they're just kind of normalizing that. And they haven't even normalized down to
Not even close.
pre-COVID levels. Like,
Not
not
even
even close.
Yeah.
So here's a good stat from Anthony Scaramucci of all people, because he doesn't, he's not a stat guy. But anyway, here it is. The S&P 500 closed today at whatever it closed above its 200-day moving average for the 18th session in a row. No prior S&P 500 bear market in history has made a new low after making 18 consecutive closes above its 200-day moving average. So, Sentiment Trader confirmed.
wow, did he hire Charlie Bolello? Where did he get that from?
that's great.
Sentiment Trader confirmed. Here we go. The S&P 500. This is the chart. I know people that are listening can't see it, but it's never happened.
Okay, so do you remember when
Things that have never happened happen all the time.
All
it
the time.
just happened this
All
year
time.
or last year? So
Yeah.
when everybody was talking about, we had the initial drawdown
And then the October.
and then the rally.
Yeah.
And people were saying
the bear
never
mar- yeah.
before has a
Retraced
bear market
50%.
retraced more than 50%
Yeah.
and retested the low. And then in October, we made a new
Yep.
low.
So again, none of these stats are infallible, but we talk, as you guys talk as technicians, about market behavior, supply and demand. These stats to me are meaningful because it's just a history of human behavior. And even though this is an extraordinary moment of time, human behavior doesn't tend to change this dramatically. So
Agreed.
we can make new lows, but this is a good stat. I like this stat.
What is this?
This is the stat I was just telling
Oh,
you.
this is the one. This is the 18
Scaramucci.
days?
Yeah.
All right. Let's do your internals and intermarket stuff.
I think this speaks to your point. The market is strong under the surface. I mean, a lot of people,
We're looking for the Dow Transportation, John?
Yeah, the transport chart. A lot of people poo-poo Dow theory, but we still use it as part of our process at Potomac, and we kind of use it a little bit differently. We're not just subjectively looking at the industrials and the transports. We're putting some quantitative
Real
chops
quick
behind it.
for the listeners who are not mostly not technicians, Dow theory is that the behavior of the transportation average stocks should confirm in one
What's
direction or
happening
the
in the
other
industrials.
what the industrials are doing, because everyone follows the industrials. But if the industrials are making highs and the transports aren't, then that would be some sort of negative divergence
Exactly.
which would make you be more skeptical on the Dow.
I mean, it kind of dates back to
industrials.
when we were more of an industrial economy, right? The Dow theory is over 100 years old, right? Think of an environment where a lot of the manufacturing was taking place on the East Coast, but the country was expanding west, right? So you had to get the stuff there.
Yeah.
The rail companies were kind of the internet stocks of their day, right? So, Charles Dow started looking at the industrials, the companies that make the stuff,
Yeah.
and the rail companies.
The original
stuff,
Dow Jones Industrial Average was all rail companies.
pretty much.
Because that's what the technology was.
Yeah.
That's right. Okay.
So, if the companies that make the stuff are having trouble, that's probably going to filter down to the companies that ship the stuff at some point, right? So this concept of confirmation. So we still use it, right? We use it a little more quantitatively. We put bands around moving averages as part of our model at Potomac, but it's done well.
So what is it? This is just indicating that
This is just a weekly chart of the transports.
What are these
with
two lines?
Those are bands around
okay.
a 27-week moving average, right? So generally, if you're up above that upper band and making higher highs, that's some pretty good internal behavior or intermarket behavior. Especially
what's in this now? It's like FedEx, UPS, bunch
some
of
the
rails,
airlines,
the
probably Union
airlines.
Pacific, right?
Okay.
It's a lot of the stodgy old industrial companies.
Is Uber in the Dow Jones Transportation Average?
No way.
And if not, why wouldn't it be?
I think it should be.
It should
Not. Avis car is, and remember when that went up
Is it still
200
20?
points? No.
be. Avis Rent-A-Car is in the Dow
Yeah, symbol
Transports?
car, and there was a day where it went up 200 points. It became a meme stock.
Oh, I remember that.
And it's price weighted, and all of a sudden the transports had this ridiculous move. We're going back 2 years. If I knew what we were talking about, I would have brought
Wait,
this
was
the
up.
that
transports
Hertz
used to be
or
20
was that
stocks, that's
Hertz
what I
or
meant.
Avis?
Yeah, 20 stocks.
20
20 in the
stocks.
transports, 15 in the utilities, and 30 in the Dow. And the Dow's a mess. How is Intel still in the Dow? I just
All right,
don't
put up
understand.
this weekly advanced decline line. What are we looking at here?
Just a weekly running total of advancers minus decliners, right? And
Are you pulling out the non-stocks, or you're not?
no,
getting
we
involved with that?
actually use all NYSE traded stocks and
So-
issues. So we include the closed-end funds, the bond
Right.
funds, right, to get a holistic view of what the market's doing. And again, we're not just kind of looking at lines on the chart. We're putting some math behind it. Moving averages with bands, and this to me is a breadth confirmation. There's been a lot of breadth confirmations. We have some other charts as well, right? So you have the transports doing well. You have advanced decline data starting to turn and move higher. So to Michael's point, it's a strong market under the surface. Now the S&P 500 has gone nowhere, and the S&P 500 is the benchmark, but there are a lot of other stocks out there.
If you look at equal weight indexes, if you look at a lot of different ways of looking at the stock market away from cap weighted index, it's all the same message.
So I was looking this morning at the advanced decline line, daily data for the S&P 1500.
Okay.
And it is within striking distance of a one-year high, the advanced decline line for the S&P 1500.
If you talk to the average, even professional who works in the market, they would not guess that.
No, of course they wouldn't.
January was a very strong month for stocks. I think the market was up 6% or so. It's now February 16th, and the market has gone sideways all month, but we're digesting those gains,
That's fair.
right? Like we're not advanced, but we're not giving anything back.
Also, though, just historically, after a shitty year in the market, you should expect a big stock market rally. That's what not always, but almost always, the worst years are followed by pretty good years.
And look what's leading. It was all the laggards from last year. So the rotation it's real.
I think that's probably the
discretionary
biggest
Shit
debate in the
happens all the
market.
time,
Yeah.
though.
ARK is up 43% year to date. There's a great book called It Was a Very Good Year, and it's the 10 best years in the market, and they all follow, I think all of them, for the most part, follow very bad years.
Yeah.
Maybe the late 90s is an exception, but for the most part, after a really bad year, you have a really good year.
But I think the cognitive dissonance this time, and what people don't like about this is, okay, fine, we had a bear market last year, down 20% in the S&P is pretty rare. Now we have a bounce. The problem is this bounce is not being accompanied with a recovery in earnings. In fact, the earnings are getting worse, and rates are going higher. So, why is it bouncing? Why is it bouncing starting in January? Why wouldn't the bounce start mid-year maybe when the Fed's actually done or when we know the extent of the earnings damage? That's why I think people are struggling with this.
You could speculate on what that is, and you guys probably have a better view of that than a lot of people. I mean, beginning of the year, people rebalance.
I have no idea what's going on.
Rebalance their portfolios, right?
So this
fresh
is-
money comes into the market. You kind of rebalance. You got a lot of things got really offsides last year.
Here's the thing. That's what should happen. But actually, the fund flow data is the opposite.
people are putting money on the stock market.
People are pulling money out of equity funds every week this year, mutual and ETF.
But this is what I'm saying about positioning. People are still so offsides.
They're offsides.
The Dow. This is interesting. The Dow Transportation Average, according to Investopedia, does not have Uber in it. However, when I look at the
Stupid.
transports, I look at IYT. Right, I look at that's the ticker that I look at, and Uber is the fourth biggest holding.
What?
about that?
Explain. How is that possible?
IYT is
Well,
just a
'cause IYT is
transportation
a trans-
ETF.
it's
It's
the
not the
ETF.
Dow
Yeah.
Transport
Yeah.
And
ETF.
they'll
not the
rebalance
index.
more
Yeah.
frequently.
Yeah.
so who's the S&P Dow Jones indexes?
Yeah.
So what are they doing?
They're
How do they
cutting
think
edge. They see the
No,
future.
no. Isn't I thought iShares was MSCI.
iShares is MSCI.
Yes.
And then,
Yeah.
No, but I'm saying why wouldn't it be in the Dow Jones Transportation Average?
Because they
'Cause
don't
they're old.
rebalance
Come
these
on.
things too often. When's the last time they changed a Dow stock?
How do people transport themselves if not via Uber? I don't
Lyft.
know.
We got to poke them
Oh,
with a
there's Lyft.
stick,
Yeah, it's
wake
Lyft.
them up.
Yeah, left is in here. No, just kidding.
All right, what do we have from Sam Rowe, Mike?
I don't know. What is this?
Rally from October. Who put
Love
this?
Sam Rowe.
Yeah.
Oh, okay, here, exactly. Sam is proving our point. So this is from Bank of America, Global Fund Manager Survey. The rally from October 12th, driven by easier financial conditions, generally viewed by investors as a bear market rally rather than a new bull market. 66% of investors think it's a bear market rally. Only 23% of investors
This
think
is
it's a new bull
new.
market.
This just happened.
This is February 23rd.
So that-
oh, wait a
right.
minute. I'm sorry,
February
February 23.
23.
My bad.
So they're still so offsides and getting more offsides. They're selling their funds.
So the longer stocks stay up here, the more people are going to have to chase.
gonna
That's
have to
the
chase.
problem. And it could lead to a nice short opportunity for people waiting to short this market.
what do we have? What do we have here? 10-day breadth thrust.
Yeah, I mean, listen, that's a pretty rare signal. This is basically taking a running total past 10 days of advancers, decliners, and when the ratio gets over 2,
Stocks going up versus stocks going down.
yep,
Over 2 meaning 2 to 1?
2 to 1
Okay.
over a cumulative 10-day period. So you take the past 10 days, add them up of advancers, divide by past 10 days decliners, right? I mean, if that ratio gets over 2, it hasn't happened often, right? And
So last time it happened was the bottom in March 2020.
coming out of that,
Right?
yes, coming
And
out
we're
of that,
higher
it actually
6,
happened.
12 months after.
It actually happened in May. So, I mean, that's a pretty powerful signal. So it just happened in the middle of January, right? There's the one, it actually happened in May, June 2020, coming out of the, June 4th, 2020, coming out of the COVID lows, right? So,
What else could cause that other than a lot of people buying stocks? So who are the bears?
Well, the Bears got
apparently-
out at the end of the year, and they just
Like
dumped.
nothing can artificially cause a bread thrust. I'm trying to think like what would be a reason to explain this
short
other than
covering,
people buying
short covering.
Short covering.
So there, we showed that chart last week. It was the highest short covering in since 2016 or something like that. It was
yeah, but this happened in mid-January.
yeah, that's what I'm saying.
So
yeah, no,
okay.
they
this happened before the short
Oh, that's
covering.
right, that's right,
From last week or the week before
Yeah.
that.
They said short sellers lost $300 billion year to date or something like that.
Maybe.
I forgot when that
People
came
like
out.
to pick on short sellers. I like short sellers.
They keep the market honest.
They do.
What's this table with
This
the bread
table is
thrust?
basically the stats around that breath thrust. And, what's kind of interesting to me is a lot of people love to call out, what happens. This is, how the market tends to perform, the S&P 500 tends to perform over the next year of trading, right? Which everyone loves to do. But nobody tells you kind of what the ride is like over the course of that year. So
Great point.
we pay attention to those last two columns pretty closely. MAE is max adverse excursion. So the most you were down on the trade if you took it since the signal.
Yeah, that's a
since the
great.
signal
Instead of,
fired.
I love max
what is-
adverse excursion.
max adverse. So the excursion is like
let's say this triggers the S&P is at 100, right? So you buy the S&P at 100.
Why do you just say max drawdown? That's like the
Because
Winnie
it's
the,
not max
it's the
drawdown.
Winnie the Pooh monocle.
It's not max drawdown. Max drawdown is your drawdown from the high.
Right.
This is the most you were down in negative territory since putting the trade on, the most money you were down, right? So you could be up 100% and then draw down 50%. That's your drawdown.
I understand.
So, what's the ride like? Everyone loves to
all
put...
right, so a 10-day bread thrust triggers, and then you're like counting down historically backward.
Yeah,
What
from
all
a
right,
year.
So what is the lesson from the second to last column?
The
then?
lesson is people love to throw the stat out there, the market's higher 1 year later.
Yeah, that's what we do.
And,
Yeah.
and but
That's
like nobody...
that's like half our shtick.
Shit,
So
he just blew up our spot.
go easy on us.
No, it isn't.
What's
No,
the MFA? What's MFA?
max favorable excursion.
Wait, no, finish your thought. But
But I think it's helpful to know what the ride is like.
Yes, I
right?
agree.
So you can you withstand it, right? It's right up there with if you put $10,000 in Amazon on their IPO, you'd be worth this much today. But would you have ridden that 90%, 95%
if you
drawdown?
forgot your passwords to your brokerage account, then you
Right.
would be,
So
right.
we think it's favorable to kind of, or at least helpful to talk about what could go wrong. What's the path to
Okay.
get to that?
So MFE.
Is max favorable excursion. So that's the most you were up on the trade at any point within that 1 year period.
So even that looks favorable. So the max favorable excursion after a 10-day bread thrust a year later is 26%
on average.
On average, of course. And the max adverse version of that is -4 on average.
Yep.
That seems like a pretty good trade-off.
Look at
to
a
me.
year. Yeah, of course. I mean, it probably is, but
Right.
not everybody can withstand that.
Well, what's the worst? 18.5%?
Yeah, but look at a year like 1949. Jay remembers it.
Oh yeah.
At one point you were up.
It's the first year on the floor.
Exactly.
Yeah.
The most you were up at any point within the year was about 31, a little over 31%, but the trade would have closed with a gain of 12.8%.
Okay.
So that's your drawdown. That's a big drawdown.
Right.
So
But you had Sinatra.
You did.
It wasn't all bad. Did
wasn't.
you? 41? Probably not.
you would have.
49?
Yeah,
You
I
definitely
think
did.
that was him. Yeah.
49 you had
Those
him.
Hoboken days, yeah.
Yeah. All right.
So
That's a good message for people because the way we phrase it is the map is not the terrain.
Exactly right. It's the same
So
concept.
I could point to the other side of the map and show you the route to get there, but I can't describe the feeling of going through that route. You almost have to live it. And I think from an investing perspective, it's like, yes, Amazon is up 19,000%, but there were days where you were down half your money.
But if you show it on an arithmetic chart, you don't see that 95% drawdown.
That's right.
So that's the way you should do it.
I think that's a very good lesson for people.
And we also kind of, for us, we're big on good alone, better together. So we always look at things. We don't never just look at one indicator, right? And I'm sure nobody would really ever trade on one indicator, but people love to harp on this stuff. But you kind of start combining this. You have this breadth thrust. You have transports doing well. You have advanced decline data starting to inflect higher. I mean,
And news getting better, and earnings not that
Yeah.
bad. Like, it's everything.
We're almost starting to sound like perma bulls. I'm actually getting scared. My default setting is actually bearish. I have to work at a place that's systematic. Otherwise, I would just be bearish all the time.
I think that's most people.
Wait, why?
I have a theory on
You
this.
my age?
I think we're about the same
It's
age.
human,
All right, so
it's human nature. It's not
So all
unique.
right, hear me out.
So you and I have seen big bear markets.
So you and I
but
have seen
they
big bear
always
markets. They always come
resolve
back,
higher.
but at the same time, sitting in college in the late '90s, right? It's the greatest thing in the world, right? Basically cutting class to go to the library to trade Microsoft and Cisco. And at one point, I actually told my dad, I said, I think I'm going to just become a day trader. Like, this is pretty easy. And my dad was in the business. He was a sales trader. And he basically looked at me and was like, you know what, Dan, you're not that smart. It's a bull market. He's like, just finish school and go to work.
Boy, was that great. Was that true?
It was so true because I had a job lined up at the New York Stock Exchange for a specialist firm. I had interned there for a bunch of summers. And I was literally thinking about tossing that to go sit in some office on Long Island and day trade.
Dude, a lot of people were. And
I
a lot
know.
of people did.
In 1999?
Yeah.
A lot of none of them are doing that now.
No,
No.
we just went through it
They
though.
sell-
again.
they
And we're
sell,
going through it again
They
to the
sell
point
small
of
business loans now. So
they were doing mortgages
They did
in around
mortgages.
06, 07.
Yeah.
But so for me, that was just we've lived through that, and everything is
that
great.
was
So
a
then
very
we graduate.
that was a formative experience for you.
Well,
Because,
but then so you graduate, you go to work. It's the year 2000, right? The new
Yeah.
millennium. Everything is supposed to be puppy dogs and ice cream. I started working on the floor of the New York Stock Exchange the week that AOL bought Time Warner. This
remember.
time is
Yeah.
different, right? So we get the bursting of the .com bubble, right? So I have a front row seat for that on the floor of the New York Stock Exchange. And within that, we get 9/11. We get the accounting scandals, Enron, WorldCom.
Yeah.
I'm
Yep.
sure you saw some of those
Those are
stocks
fun.
trading. Enron was trading basically 2 panels away from where I was working. It was the most crazy thing I've ever seen. Right? Things start getting better. Then we get the global financial crisis, and then we get COVID. So it's like you have these once every 100-year events, quote unquote. We've had 3 of them.
And the market just keeps going up.
So all right. So
And the market just keeps going up. But it fascinates me that things go down so quickly. And I don't know.
And psychologically, so this is not unique to you. Every investor is more bearish because the disposition effect, that losses, you feel them twice as much as gains.
But I have another theory too.
Go ahead.
I think your first trade where you really make a decent amount of money can imprint you as well.
I totally agree with that.
And when I was a market maker on the floor of the stock exchange, my first big money making trade was to the short side.
So I totally agree
So
with that.
now, you
Yeah,
have
yeah.
all these events, and then oh wow, look at this! I
But
can
also
make money
your
betting
first big
against things.
loss. Your first big loss could.
I've never had a big loss.
Sure, I have. Your first big loss, though, also I think could have a really big effect on how you think about risk.
100%.
And you can never shake. It becomes wired
But Dan,
as a part of you.
Stan, since you started, you saw the .com bubble blow up, you saw the GFC, you saw COVID, and the market's up.
I'm not saying it's rational.
No, and I'm of course no. But the market's up 12% a year probably over the time.
Yep.
Compounded.
No.
With
Well, we had a
somehow-
lost
Oh,
decade
maybe
in
not.
there.
Yeah,
No.
yeah. That's true. It's fair,
2000,
fair, fair.
2000 to now?
Yeah.
Yeah,
maybe
it was
not.
the era that you're referencing, late '90s when you're in college. I'm in college at the same time.
Yeah.
The Dow's 8,000, breaks 10,000 in for the first time in '97, right?
Yep.
Doesn't stay above because then we have the Asian crisis and all that shit.
And then long-term capital.
But so it's 34,000 now.
yeah, it's crazy.
I don't know if that's 12% a year, but it's like
Whatever. Yeah, it might be
But
less.
it's-
but guys,
it's
I
not
have bad
bad.
news. The markets are rolling over again on the lows of the day. Duncan, delete everything I said.
yeah,
this
yeah.
morning.
Let's start this over now.
I'm all bearish. See,
Take it
this
from
is
the
why
top.
I'm bearish.
Hey, what's this regime index?
So basically, this is something that we created for intermarket analysis. It is a combination of relationships across equities, fixed income, and commodities. It's basically, this chart allows me to be an economist without being an economist. So when I look at it and I look at the one-year slope or the one-year trend, you can basically see, so when it's above zero and green, the trend is accelerating. When it's above zero and red, the trend is still working higher, but it's decelerating, right? And vice versa on the downside, right? And to your point, things are starting to become, I say, less bad, right? We're still below zero, but green. So things are basically declining at a slower pace. So if you believe in market relationships, right? I'm not sitting here ripping apart economic data. I'm just looking at what the market's telling me, right? And if you take this combination of relationships that we look at, things are
So
becoming
what's
less
in
bad.
there? Commodities.
So like the
Bond
ratio,
yields.
the copper gold ratio is in there. A ratio of high beta to low volatility. A ratio of regional banks to REITs, right, and high yield bonds to treasuries.
Because there's signal in what the crowd's preference is from one of those things to another.
I think
which is outperforming the other.
So,
Of course.
To me, the bear case is interest rates again, because we've got the 2-year at 4.6. You've got the 10-year at 3.8. This is the highest it's been since December. If interest rates, which are in a pretty steep uptrend right now, at some point, this is going to present a problem for stocks. Just like the risk-reward equation. Wait a minute. I could get 5% on 1 year. Like that is potentially problematic.
Is this the most you've ever seen stock people pay attention to bond yields?
It's the most for paying attention to every data point. The CPI was something that we never even looked at. And
Yeah.
now we're looking at that. But yeah.
It's a Super Bowl now.
The bond market's moving faster than we've ever seen it before. But look at the volatility in the 10-year. It was 3.4% just 6 weeks ago. And now
I had a chart of the move
knocking on the
index. I was
door.
gonna put that in here.
4%
I forgot.
again. So yeah, just the last 6 weeks, as the 10 years rallied, so has the market. So something's a
Yeah,
little
Jay,
askew.
2 weeks ago, the 2-year was at 4.03, and now it's 4.6.
Yeah,
That's crazy.
Those are
Just
ridiculously fast moves.
anecdotally, I don't ever remember a time where stock market people were this fixated on a 10-year treasury.
We didn't talk about
We
the
never
bond
had
market.
to, is
no,
the point.
No,
that you haven't had to in our career.
Never.
Yeah.
Right. Never had to worry about inflation, but you definitely weren't fixated on treasury yields. They just weren't the thing. Even when the Fed was the thing, the 10-year treasury, what the f*** are we talking about?
And the dollar's the other thing. The dollar's the thing that it drove the bus last year. As the dollar kept getting stronger, we kept getting weaker. The dollar's finally stabilized. It found support. It was rallying again.
And a pretty big bounce and hasn't impacted stocks
something
yet.
Not yet.
something,
Not
interest-
really.
something interesting that I didn't see a lot of people talking about. I didn't throw this in the doc, but I think your Denny did this morning in like a quick blast. Foreign investors and or banks or whatever put $1.7 trillion into U.S. bonds last year, which offset the entirety of the tapering.
Wow.
And then some.
Wow.
So
crazy.
where would rates? I guess where would rates have gotten to if not for all that foreign buying? Maybe we'd be at 6% already.
Crazy.
Yeah. Let's.
So you're talking about interest rates, yet credit spreads are tightening.
Yeah,
Right.
I was gonna say let's go to
Right.
credit spreads here.
Right.
John,
Credit spreads are tightening. And this is so the chart.
CCC chart.
The chart that I brought. So this is CCC and below. This is like the
junky-
crappiest
yeah,
of
yeah,
the
this is
crap.
shit.
Can I say crap?
Yeah.
Okay. This is basically
What's in here? Like FTX bonds.
pretty much bankruptcy claims. Right. So and just like a simple weekly chart with a 52-week moving average, and this is just something that we pay attention to and don't necessarily use it, but.
That's the yield 991.
This is
No,
so
it's
weird.
the spread.
Financial
The
conditions,
spread
the price of
between-
the price of the spread.
financial conditions are easing and tightening.
Easing and tightening.
Yes.
So, but like this thing did a pretty good job on the way up when it crossed above the 52-week moving average in early 2022. Right, we came into 22. A lot of people don't remember. Like everyone talks about how bad 2022 was, but
Made an all-time high.
Market made an all-time high.
January 3rd.
I was actually on some media platform screaming about how bullish I am. I mean, who's like default as the bear, right? But I've just kind of gone the trend following route, right? So I always tell people if you're a trend follower, you're going to be max bullish at the top, and you're going to be max bearish at the bottom.
That's the risk. If you're a trend
course it's the
follower,
risk.
that's like every investment strategy has an Achilles heel. The Achilles heel for trend following is if what the cost is of staying bullish past the peak.
But people are default trend followers because we've made the point that bears are the most bearish at the bottom.
Of course.
That's right, fair.
Or they sound the most convincing, maybe. Because they have the most confirmation bias.
Yeah.
So, like, that's when they really go crazy.
So even if they're not necessarily following the trend, the subconscious trend is confirming that they're right.
Yeah, I agree.
But because the news is terrible around that time. Just go back to
it's
2020.
black. It's black.
Right? The market bottoms on March 23rd of 2020. We had just shut down. Right?
Yeah.
You were less than 2 weeks into it, and
Yeah.
the market was bottoming. And I remember April 6th being the day, because it was my wife's birthday and our anniversary. And things were still terrible. We were trying to figure out what to do. It was our first anniversary. And I was running around the house. She's all happy, and she's like, what's going on? I said, well, it's our anniversary. I said, I'm going to buy some stocks. This was for my personal account. And she's like, what? She said, do you see what's going on? I said, yeah, it's okay. We're going to buy stocks here.
Good for you.
You
The
buy-
balance made no sense to me.
You buy it as Bill Ackman was on the air being like, hell is coming.
That was March 15th.
There were
Pull the
early
trigger.
there were early indications that at least a short-term bottom was in, right? And I think the biggest mistake a lot of people make is they think they have to be all in or all out all the time, especially like, if you're a research analyst or if you're, writing a newsletter, people expect you to be all in, all out. But in actuality, it's more nuanced than that.
It's
You
so
can be
childish.
incrementally
Like,
positive.
Swing to
Bullish
100%
or bearish,
stocks or
right.
cash.
Yeah, what are you, bullish or bearish?
The good news is nobody actually really does that. Or
Nobody manages money
No,
that way.
of course
I mean,
not. You
it's
can't.
crazy.
Jay, are you bullish or bearish?
I'm neutral right now. I think we are more, if you're equity, I'd be more bullish because I think we've broken out of these downtrends and now they're buyable dips. There are actual support levels to look at. 4,100 in the S&P 500. Below, we're above the 200-day moving average, starting to flatten.
We're at 40.96.
Yeah, all right. So we got 4 points.
You're
We have a
stopped
few more
out.
times.
You're stopped out.
No, we'll see where we go. But it's hard as a technician to say that I'm still in the bear camp right now because the breadth has just been too widening to the positive side for me to say, but if you listen to the news, then you,
Dude, is
you
that
want
the
to jump out
worst
the
kind
window.
of? Is that the worst kind of technician? The one who says I'm bullish, and then no matter what happens, like they'll find a chart that confirms it.
Yeah,
like why they should stay bullish,
I-
and vice versa.
And this is where
That's not really a
technicians-
technician anymore. That's a demagogue.
Confirmation bias,
Yeah.
dogmatic.
It's an if this, then that. And you're always trying to manage risk. So you're not going to get the bottom, you're not going to get the top, but you're going to get the meat of that trade during the trend.
I like to keep it simple. If the market is up that day, I'm bullish. If it's down, I'm bearish.
All right, there you go.
Not enough people are talking about the possibility that stock bond correlation could be reverting to pre-2000 dynamics. I find this idea really interesting. Most of the people listening to the show, if they were around pre-2000, probably don't remember much about stock bond correlations. I know I don't.
So stock bond correlations were positive pre-2000.
For how long?
Really
All of the 90s?
Most of the 90s.
Like rates went up
Rates went up,
gradually because the
bonds-
economy was good.
Bonds went up, stocks went up.
Yeah, okay.
Bonds went down, stocks went down, right? And then kind of realistically, it's more like 1998. It was long-term capital management was probably the catalyst for the flip.
Yeah.
Right. If anybody remembers long-term capital, I actually had a buddy who was working there. He graduated a year ahead of me. He was talking about how great it was. Right. And I was like, whoa, you got a job there? That's amazing.
So summer of 98, that blew up.
That
and
blew
then
up, August of 98.
Greenspan overnight went nuts on rates.
Yeah.
He dropped rates as fast as he could.
So then all of a sudden now, if you just like kind of look at that chart, right, those are 1 year and 5 year correlations between, stocks and the 10-year note. So that's note pricing, not yield. Right. So through most of the 2000s up until last year,
oh, look at that.
they moved inverse, right? So this is your, when people talk about the 60-40 portfolio and the death of the 60-40 portfolio, like this worked out so perfectly because it did its job theoretically, right? When stocks were up, bonds were down, but when stocks were down, bonds did your job of hedging. So our view lately is that could be changing, right? And, the 1 year correlation has now flipped positive. The 5 year correlation looks like it's about to turn positive. So what happens in that environment? Like, are investors ready for
What
that?
happens when stocks and bonds are correlated?
What
and
happens
not
when you're
inversely correlated?
What happens when your diversifier is not
Well,
diversifying?
that happened in 2022. That was the entire thing.
What happens if that happens for a decade?
But what
It
happens
can't.
if it's a decade?
Well, no, I shouldn't say can't. The idea that you're going to get killed in bonds again seems kind of unlikely. Is the 2 year going to go from 4.6 up to 7? I mean, I guess it could. But if that happens, then your stock's going to destroy you anyway.
Yes. Right. But I mean, just the fact that they're moving together, I mean, I think that changes the investment equation a little bit for people who kind of think a little bit more strategically.
So is that an argument for like a larger alt sleeve in a portfolio?
I think it's an argument for like a barbell approach, right? You're not gonna really get people to not own bonds, right? Just given the demographics,
especially now when they're actually attractive.
Exactly, but
I own bonds.
You're way too young for that, no?
Yeah, right.
No,
but I think there's probably
never too young to start.
I hear you.
Okay, go ahead.
There's probably an argument to be made for seeking out things that
Yeah.
have little to no correlation to equities and taking kind of this barbell approach, right? Take your stock bond portfolio over here, but start seeking out things like, I don't know, trend following, things that are less correlated as a diversifier to add to the portfolio.
There's a few problems with that I have seen, and you've seen this too, I'm sure. The first is people just say, "Oh, alts." There's like
what does that mean?
There's like 9 million different things going on. You could have a very different experience buying any one of the 12 different alts that I
think you have to drill down. I think you have to drill down and actually do the work, right? Because if you look at something, I forget what the ticker symbol is, but there's an ETF that tracks like the long short equity strategy, and it's
Is it BT? Is it
BTAL is new. It's
BTAL?
something different, but a lot of these still have a tight correlation to the S&P 500. I mean, most long short managers.
Yeah.
Don't run neutral. A lot of them will run 70% net long. So at that point, you might as well just buy the S&P for 3 basis points.
Right. Or if you want to use it as a hedge, just put 90% of the money to the S&P, put 10% in cash. You'll have the same drag that you're getting from.
Probably.
Right. So there's some element to that. Second thing is I think it leads people down some dark alleys when they're convinced that stocks and bonds won't be good enough, and their willingness to do stupid shit. Like, I mean, I'm just throwing crypto, but really anything under the sun that could go bad. It's not that they shouldn't do those things. It's that they shouldn't assume that that's a safe harbor.
No, I don't think it. No, you can never assume anything's a safe harbor, right?
That's right.
I mean, just take a look. Take a look at the next chart that I have here.
Okay.
Right.
What's the next chart?
Here's your safe harbor. Long-term treasuries.
Yeah.
LOL.
Yeah. It was until it wasn't.
Here's your safe harbor with an equity-like drawdown of 46%.
I prefer the zeros personally.
Yeah. This is
ZROZ.
Yeah, what did that got cut in half, right? I'm pretty sure.
Yeah,
zero coupon bonds.
Yeah,
There's the hedge, the ETF.
So
ZROZ,
it's still in a 50. That got hit for 60% almost. Now it's down
50%.
Yeah, almost
60%.
Yeah,
I mean
because that's no income. That's just pure price.
It's all the duration.
Oh my God,
exactly
all of it.
Here's your safe asset with equity like drawdowns.
Hold on, this is a 46% drawdown from the high. For this is TLT.
TLT.
Now, let's assume that
this is a lot of people's default risk off product.
I know, and it worked really well. And it worked really well, but it did also get killed in 08.
Yes.
Okay, so like I think most people understood that it's not the same as buying SHY.
Fair.
I think like 95% of people using this as a hedge knew that it wasn't the best hedge. It's not cash.
Hold on, nobody's using TLT as a hedge. I mean, I should say nobody. To me, this is a trading vehicle.
It's the risk-off vehicle.
It's a risk-off?
I kind of think people...
No, hang on. I'll say it differently. People piled into TLT when there was a risk-off event. I don't think people were using TLT and stocks as a 60-40 type thing.
Well, how much money is in it? I'll tell you
20,
right now.
like 20 billion.
Oh, okay.
I mean,
so then, yeah. It's probably not a big component of like, let's say, model portfolio at Morgan Stanley.
30 billion. But my point is, prior to this episode that we're in, TLT was, you're right, you guys are right. TLT was a risk-off trade. Whenever there was a risky event, this thing shot up, asset piled in.
I think that's fair.
Are there any triple levered bond ETFs?
There are.
Yeah.
I didn't know.
We're actually working on a quadruple. So we're trying to get that out quickly. What is this multicolored
Get rid of that.
chart?
We don't need to do this one.
Oh, we're going to skip that?
Let's talk about Elon.
Is
boy.
Is Elon Musk getting like visibly crazier? Like, is that the narrative now?
Is it possible? I mean, the whole Twitter thing. Let
me set this up.
Okay.
All right. Twitter chief executive Elon Musk rallied a team of roughly 80 engineers to reconfigure the platform's algorithm so his tweets would be more widely viewed. This is according to a news site called Platformer. A disgruntled Musk called for an emergency effort after a tweet he sent during the Super Bowl failed to achieve as much engagement as a tweet from Joe Biden. Which, by the way, that's bad. Yeah.
Quote, I have more than 100 million followers and I'm only getting tens of thousands of impressions.
A Twitter employee and cousin of Elon Musk, James Musk, posted urgently in the company Slack at 2:30 a.m.
As one
after the
does.
Super Bowl, right? Asking all employees who can code to participate. Quote, any people who can make dashboards and write software, please can you help solve this problem? This is high urgency. That sounds like Elon was punching him in the face.
Yeah, and it's funny because one of my friends, Walt Pisick at Walt Lightshed, he tweeted and he noticed if you go to the For You part instead of who you're following, everything that he liked was showing up in his For You feed because he followed Musk. So it was gaming that if you follow Musk, you're going to see everything he replied to, everything he liked.
This is
Yeah.
a little childish.
Why isn't it
It
enough
is childish.
to...
But I mean,
look at me. Look at me. It's
I don't care. I don't care how much money you have.
Yeah, I
$44
was gonna
billion
say.
is a lot of money for an ego trip. Like, I don't know.
Why isn't it enough to be top 5 richest people who've ever lived or ever will, and just like be able to like do the shit you love? Like he loves building rockets. He's not like shit. I have to make another rocket.
But wait. One of the companies,
he has the ingredients to have the greatest life anyone could ever
but
live.
listen. So to that
And
point,
he's worried about his tweets.
one of the
Yes.
company's 2 remaining principal engineers offered a possible explanation for Elon's declining reach just under a year after whatever. Okay, he said public interest in his antics is waning, and so what did Elon do? You're fired.
Yeah, and that's
Fired
probably
the
the
guy.
most likely explanation. It's not that he doesn't have reach.
No, it's fatigue.
It's people have seen it.
Yeah, we get
got it.
We saw it. It's we're over it.
You know
Right.
what I think this is?
Psychosis.
These are like the kids in high school that got beat up,
Yeah.
and now they run the world.
Okay.
So they're still just childish and immature like they were in high school.
Well, wait, no, it was
except they
good.
didn't get to
I
have
think it
any
was
fun.
good if you got beat up though in high
Was it?
school. I think so. I think you had not bullied, but I think you had to have been some fists. That's my problem with a lot of people I run into now. I could tell they've never been beaten
Maybe
up.
beat up, they're picked on,
Picked-
geeks,
picked on.
nerds,
Yeah.
picked on.
Yeah.
Right? And high school probably wasn't fun for them. And now they have all this money, they can do whatever they want, so you do things like
I
this.
think Elon's dad owned an emerald mine in South Africa. I think he was okay in high school, but I see your point. This, I don't know. If this is a fake story, then we all are buying into it because it sounds like it's real.
It sounds
Oh,
like something
yeah.
he would do. It's
Yeah,
totally real.
Absolutely. So now Tesla workers are trying to unionize.
Fired. They fired them all.
Yeah.
Did they?
Yeah.
Yeah, I think that came out today or yesterday.
And they had a.
Oh my god.
What's this picture with Phil Knight? I like this.
Let's
This
start
is
with
great.
this picture. So I just want to get some reactions from you guys. So we had Michael Jordan shot in 1998 against the Jazz, and you've just got the crowd fixated. And then you've got LeBron breaking the record, and you've got literally, as would I, everybody in the crowd holding up a cell phone, with the exception of Phil Knight, which is pretty epic.
Yeah.
But look at the crowd. What year is that? 98?
98.
Okay, so look at the crowd. Nobody has a camera.
There's
because-
one dude. There's one dude to the top left of the backboard who has a physical camera.
And then the guy on the bottom whose job
The
it is
camera
to
guy,
have a
right.
camera.
Correct.
And the rest of us were okay with that. Like someone else is going to get this picture. It'll be in Sports Illustrated. I don't also need to get this picture.
So the
Okay.
juxtaposition of this is pretty striking. I don't necessarily. I mean, is this good? Is this bad? It just is.
One thing to explain this though, this is not because they want the picture. This is so that they can show their friends that they were there.
Yeah.
So it is the experience, but the experience is worth more to people if they can use it to demonstrate why they're better than
I
people
would be
they
taking
know.
a picture. That's how you. That's how
100%
you
I
have the
would've taken
memory.
the
Of
picture.
course.
You're watching it on a 4-inch screen
No.
instead of in real life.
Well, I think people are. Well, that's a fair
But you
point.
were nodding when I said that. You agree with that?
yeah, no, I totally agree.
That's a fair
Everyone
point.
would rather watch a concert now on the screen of their phone.
How
than
about
in
this?
person.
If you took that picture, you'd probably post it to Instagram and never look at it
Immediately.
again.
Never. I was at LeBron's game at the Sixers where he went to third past Kobe Bryant, who then died the next day. It was awful. And, you know, my kid, every kid there, anyone under the age of 50 was recording that moment.
Yeah.
So I have it. Have I ever gone back
Of course
and watched
not.
it? No.
But does this make it any less exciting? Are you not experiencing the moment because you're watching it through your phone? I don't think so. I think the electricity in that atmosphere was probably insane.
Yeah, without a doubt. But we can sit back and judge them.
Don't you
like,
think in 10
wow.
years, though, this will look ridiculous? Because by then, I'm not saying people get over taking pictures and bragging how great their life is on social media. But by then, it'll just become this thing where, all right, everyone's going to have the picture. It's cooler if you don't post it.
No.
It'll never become that?
No. In 10 years, you'll be taking a picture with your eyeball or something.
I was just going to say it's going to be
The
embedded in your
camera
eye.
will be in your brain.
Well, okay, but so if,
Elon's gonna put it there,
if
by the way.
everyone is doing that, then what is the point? Is what
so
I'm
you
saying.
can put it on Instagram.
This feels peak something.
No,
to
it's
me.
not.
I-
It's
I
not.
think the
It's not
kids-
peak anything. This is what it is nowadays. This
The
is for
kids of
Instagram.
these kids will mock these people somehow. Because we get mocked now as you
I'm
know.
mocking them, and it's 4 days later.
Yeah.
This looks ridiculous to me. And actually, you know what's amazing to me? Not one of these people is looking around and saying, "Oh, this is so ridiculous." Everyone's holding their phone
So
up.
if you're at that game, what are you doing?
My phone's up.
My instinct would be to take the picture, but I do think this about myself. I don't do things that everyone else is doing, and if I did look around, I'd be like,
Okay.
Yeah.
Okay. You're 100% have
I
your phone.
100% would put my phone down if I noticed everyone else had theirs up.
How would you? You
I'm
would.
an iconoclast.
No, you would. Yeah.
Yes.
You're taking a picture.
You take a
Barry
photo.
said that.
You take a photo. You know, you don't just like stand there recording the whole
Oh, dude, you would never see me like videoing. You would never see it. I might take a picture. This is a lot. It's a lot. And it's everyone.
But how about this? Hold on. Let's also. This is the record-breaking bucket. This is not normal.
what do these people give a shit about this record? What does it mean to them?
I don't know.
None of them.
Just being there is enough. I think
Being there is enough.
Kind of like what we were talking about earlier, just like being present.
But now you're proving
Well,
you were
yeah.
there.
Yeah.
That's all
Right.
it is. It's just
It's all for. It's
It
all for
feels
present.
peak something to me.
At least-
You know what else I
I don't
missed
know.
too?
You guys sound old.
On a related note, I hate the flashlights at concerts. I kind of miss the lighters.
Yeah.
I miss
lighters are
lighters at
great.
concerts.
For you bring an analog lighter. Actually, all right, I love it.
Jay, what's the sandwich generation?
all right. You
Wait,
know,
hold on. We got to get some ice in here. We're gonna crack this in Coro while we do the last topic.
Okay.
All right, you can work on that box.
Oh, it is 23 degrees. Now I
You
feel
see,
it.
exactly. It's very special. No, I came to you guys for help. We talked about this outside the floor one of these days. No one talks about Gen X. We're like the forgotten generation. Keep it that way. All right.
yeah.
No, Jay, keep going.
We had the greatest life. You know, I mean, just go out, come back at dark, get in the station wagon, no seatbelt, mom hit the turn hard, fly
No
around.
phones, no internet.
No, nothing. The
best.
But right now, in my experience personally, we are that sandwich generation. We have kids that are getting more and more expensive. In my case, two in college,
college
one
kids.
high school.
Yeah.
And then we have the aging generation that needs help. And a lot of our generation is in different directions, you know, because we're both product of divorce, and you have a mom here, a dad there,
Me too.
aunt by herself.
Divorce.
Yeah, and there's no playbook that I've seen that says, all right, what's the play? I know how to save for college. I know how to save for retirement. How do you save, and how do you drag those elders along and say, all right, you got to help me out here and take care of yourself instead of relying on me on
Yeah.
top of everything else.
Unfortunately, you're going to need robots to come pick up the slack, to take care of people.
AI will fix this?
No, not AI. Like physical robots
Oh.
are going to be taking care of 90-year-olds in the next 10 years, and that's going to become the norm. Because we don't have immigration that will take all these nursing jobs that are needed. It's like, there's just no. What? Am I about to drink a measuring
I was
cup
about
full
to
of
start
tequila?
pouring this in there.
That's really funny, actually.
Yeah.
I probably would have drank
All right,
that
so
anyway.
Jay, so what's the point?
The point is, it's
He's
just.
complaining about taking care of his parents.
Yeah, no, yeah. I need
You're out,
psychological
Dad.
help, and that's why I came. No, it's just one of those things that I don't think has been addressed enough. And as Josh shushed, this generation is in a situation that we haven't seen. People are living longer. It's getting more expensive to maintain that lifestyle, so they're falling back on this generation. Nice pour there, Josh. And
Can't tell I was a bartender.
yeah, and
this is good.
if you haven't
This is very
noticed, college hasn't gotten cheaper.
There we go. Sorry, Jay's trying to make a point.
No, there is no point. The point is,
Jay, you're 100% right, and a lot of what financial planners now are faced with
Yeah.
is answering these kinds of questions for people in their early 50s. They can't believe what they're looking at. They have parents who are late 70s, early 80s. They have kids who are in college and probably going to require assistance for at least the next 10 years. Like, I want an apartment in the city. My job's not paying me. Like that whole thing. It's terrifying. And I don't think most people have saved money to be able to even do this.
Yeah.
So I think it's a huge issue. Fortunately, there aren't that many of us. Gen X, relatively small.
Yeah.
That's, we're in hiding, so to speak. I think there are 65 million Xers. I think 69 million boomers still alive.
yep.
And then like 75 million millennials. So maybe the answer is we make our younger brothers and sisters do this.
All right, that works for me.
I
I'm in.
don't really know a way out.
No, but this is
I
one of
agree,
those
it's a big
topics
issue.
that I think is going to become more and more of something in your industry
Yeah.
that we're going to deal with. And I researched it, and there aren't enough things. I may blog about my own situation and open that blog back up soon. But it was just one of those things that I came to you for help. I wasn't here, for anything.
Dude,
else.
and it's not just money. And it's not just money. our generation now has to contend with parents who are in the phase of life where you start making really bad decisions, or your cognitive, like your ability to make decisions is on the decline. Not for everyone and not at the same rate, but this is a very real thing. There's actually software being sold in our industry where the client agrees at like 70, from here on out, every year I'm going to take this test. And the test determines my own decision-making ability, et cetera. And there's like documented research that people are just less and less and less able to do things or think correctly as time goes on. Nobody wants to hear that.
Yeah.
Like, there's not one 65-year-old you could say that to that wants to have that conversation. So imagine having it at 70, at 75.
Look what happens when you try to take somebody's driver's license away.
Yeah, well, you can't.
It's crazy.
Yeah, they'll kill you. Yeah. Right, because it's much more meaningful than the driving itself. Right?
Of course.
So people don't like to hear that shit.
And lastly, you know, I'm surprised Michael didn't lead with the Eagles losing the Super Bowl. I was expecting
what happened?
that.
Okay, my question is Hassan Reddick and the rest of the defensive line. I thought they were good.
I did too. I was kind of surprised. I saw them go through the Giants 3 times this year.
Too soon. I had a bit of conviction that the Eagles were going to win because I thought that on both sides of the line they had the advantage. Obviously, Mahomes is Mahomes.
Yep.
But that had to hurt. Huh?
Yeah, it
okay?
hurt. I am okay.
Yeah.
The defense just they had an off day. You know, Andy Reid finally learned how to coach in a big game, unfortunately. And
that's coaching.
I would have bet Eagles.
I did bet the Eagles.
I did bet the Eagles
but
too.
They were
I
begging
was
you to
rooting for
take the
Mahomes.
Eagles.
Well,
yeah,
at
Mahomes is
1.5
hard not
points.
to root for. But the one thing that frustrates me, and I'm not complaining about the call, is but as fans of the game,
that was tough.
You call it consistently, and let's see a fantastic finish or a possible fantastic.
That was very
finish.
tough. But to your point, it's not as if the Eagles were going to win. Although they were scoring a lot, they probably would have. But yeah, it's tough. Listen, you're on the shit.
What is this?
This is why, you know, there are stats to say thank you for the Eagles losing, because when Philadelphia does win championships,
This is hilarious.
thank you, Ryan Dietrich. You can see when the Eagles won in 2018, the week after they won, the Dow was down over 2,000 points. It was the worst year since 2008. When the Phillies, they lost the World Series this year, so you can thank the Phillies. We started rallying when? October 13th, right before the World Series. But we had the financial crisis, 1980, double dip recession. It goes on and on in Philadelphia sports history.
I didn't know the Athletics were based in Philly before Oakland.
They were.
Did you know that?
I did.
How? Were you a baseball card collector, or I don't?
Yeah, but that was even before we were collecting cards.
But when did they move to
That I don't know.
Like in the
40s?
50s.
They all moved out. to
Definitely
California.
before the 50s.
So market is closed. Lows of the day: S&P down 1.36%. The Qs finished down 1.88%.
Do we have DraftKings earnings?
Enter. Delete everything I said. Do we have DraftKings is tonight?
Yes.
I think so.
All right, so we're at to the point
And
of
Redfin, Mike.
We're at Redfin. We're at the point of favorites. I'll go first. I have 2. This morning.
Hold on. Stop.
What?
We have fun today, guys.
We did.
Yes.
It was a good show, right?
Yeah.
All right. How's the Sincoro hitting?
Sikoro,
gone there yet.
I thought it was too soon.
Hold
All
on.
right.
Cheers, boys.
Cheers.
Oh, yeah.
Cheers.
This is very good.
It is
So
good.
being present and putting your f***ing phone down, right? Did any of us pick up a phone besides Mike?
No.
The whole time we've
My
been
phone's not here, asshole.
here? Love you.
This is delicious.
Okay, so yesterday morning, sometimes when my wife leaves the house at 6 in the morning, I just turn on the TV, and I did yesterday, and Ex Machina was on, so I revisited that.
Is that rewatchable?
Incredibly. So listen
Is
to
it?
this. Incredibly rewatchable. It aged very well. I didn't realize that movie is 2015. So, if you saw it, you know what it's about. But it was actually A24's first big commercial success. And they've been wildly successful.
Why? What else do they make?
I mean, basically all my favorite movies. Like
Really?
all of the independent horror stuff. Like they do all of that.
Is that Oscar Isaac?
There was Oscar Isaac.
Are you going to see the Winnie the Pooh horror movie?
I'll probably see it.
Wait, that's real?
I think
Yeah,
so.
I'll probably
It's very
see it.
real.
Okay, I listened to Howard Stern and Brendan Fraser on, and they were reminiscing about one of my absolute favorite movies of all time as a child, Airheads. Chris Farley,
Who wrote that
Buscemi.
movie?
The Lone
Really-
I
Rangers.
fucking love that movie.
Okay.
Chris Farley, Buscemi, Sandler, Brendan Fraser. Yeah,
Rob
Michael
Schneider in
McKeon.
who?
Kramer.
Rob Schneider, no.
Adam Sandler.
Yeah,
Adam Sandler's
Kramer's
in
in
it.
it.
Kramer's in it.
And the guy with the ponytail, Miles, I forget what his name is, but he's that guy for sure.
Why did Howard bring that movie up in particular?
I can't remember how it came up, but I'm so glad it did because maybe we're talking about Farley. I can't remember. Oh, they're talking about I think Farley and Sandler. That's how it came up.
Yep.
Anyway, just a shout to that movie. It's so rewatchable. Just an all-timer.
It's definitely, and you find something new every time you go back and watch it.
Not me. I've watched it 100 times.
Well, okay, I've only watched it 3.
Just an absolute banger.
Yeah, but fantastic call on Airheads. Great
All right,
rewatch.
I'm going to do mine, and then we're going to get you guys in the mix. I listened to Rick Rubin on with Dan Carlin. You guys listen to that Hardcore History podcast?
Why was he on Hardcore History?
The Addendum. They're friends in real life.
Okay.
So I guess a lot of famous people are friends with Dan Carlin because they listen to his show and they reach out.
Tom Hanks, remember that
He
episode?
had Elon Musk on.
He did, remember the Tom Hanks episode?
Yeah, they had Tom Hanks
Tom
on.
Hanks is a huge fan of Hardcore History.
So Rick Rubin has a book out called The Creative Act, and he thinks the first book ever written about being creative, like not just about creativity, but like what it's like when you are creating. And Justin Costelli sent me the book. I haven't gotten into it yet. Rick Rubin's a Long Island guy, Oceanside, I think.
Really?
Yeah. Rick Rubin basically is like one of the 5 people who invented hip hop as like a commercial. Like he didn't invent it in the Bronx, but like his LL Cool J, Run DMC. He made it like a big mainstream thing. Anyway, this book is this conversation. If you don't want to read the book, listen to Rick Rubin on Hardcore History Addendum with Dan Carlin. The other one is the last episode of Last of Us.
Episode 5. I'm so glad you mentioned that.
You guys, who's in on this so far?
I'm going to wait till the season's over and I'm going to binge it.
What about you?
Haven't seen it.
What else are you watching? Oh, we're going to get to yours. All right. You might want to jump into this.
I'm gonna have to.
I think you're going to
Where
have
is
to.
it?
HBO.
HBO.
Dude, the bloater that comes out of the pit. Do you know what's called a bloater?
Nerd alert. No.
Yeah, no, big time. The monster.
Yeah, sick.
That's the 4th stage of the infection
Sick.
when they get that big.
Sick.
All right.
There'll be one more of those in the season.
Dude.
It's not a zombie show. There are zombies in it. It's basically what happens in a post-human world where there's just a few of us left, and civilizations, little people rise up and create their own little villages. And
There's like this parasitic infection that's like a fungus.
Yeah.
So it grows like a mushroom inside of people
Really just-
until it takes them over.
When do you watch this? When you
And then
really
like
wanna-
and then all the moving averages trend lower. And it's like,
Who's in it? Who's the star of that?
Pedro Pascal
Okay.
the guy from Mandalorian.
That's how I would know his
and
name.
and Narcos. No,
Yes.
Yep.
And
he got famous. Oh, and Wonder Woman. He was a bad guy in Wonder Woman.
Okay.
the little girl from Game of Thrones is the other. It's amazing. All right, Jay, favorites.
All right. Well, I shout out to Brian Shannon. He just released his book. I think he's probably going to come in here and talk to you guys eventually. But that's the last book I read.
You know who wrote the forward?
By the
to
way,
that
you
book?
wrote a great job.
was good, right?
Great job on that forward. Yeah, you really put some time into that. I was impressed.
He's like, you have a week. I'm like, all right, I'll write all about anchored volume weighted average price. What else would I? He's like, no, don't do that. Like, write about like why you care what I think.
Yeah.
And that was a good direction.
Yeah,
So,
Wait, can I say something? I'm not mad at Brian. I love Brian. I wrote like a little blurb, and I didn't make the cut.
I did.
What?
Yeah, I made the
You're
cut.
100 blurb.
Come
you're
on.
on the paperback. You're on the paperback.
You got mentioned in the back. I got a blurb right on the top of the back.
Wait, I'm on the back.
No.
No, I'm nowhere to be found.
No, there's one.
I was scrubbed.
Your
I
name
think
is
I'm
mentioned.
on like the 3rd or 4th page. of the
Your name
blurbs.
was definitely thanked.
Whatever.
You're
I
on
love
page
Brian.
3 of the book?
Of
or
the
the blurbs?
Yeah.
Blurbs.
Real quick, first time I ever
I
met
was happy
Brian
he asked me.
Shannon.
He's a great guy, Brian.
Yeah.
We were at like one of those Lindsay events in not La Jolla, Coronado Island.
Yeah.
And it's me, JC, and Brian Shannon. I'd never met Brian before. And we made a plan the night before, drunk, that we were going to wake up at 7 a.m. and kayak into the caves.
Yeah.
And the instructor meets us in the lobby. He's like, guys, we can't go out today. There's sharks. And Shannon's like, I don't give a shit.
Yeah, that's Brian Shannon.
I said, I do. I'll go back to bed. That's Shannon.
I love him.
Why do you love the book?
I love the book because I kind of begged him to write it. I met him at a CMT event, and he asked a question when I was on a panel, what's the biggest change you've seen in the market? I go, the way people trade. They trade based on VWAP. They want to know where the volume is at a trade, not what the price is. And he goes...
Tell everyone what volume-weighted average price means.
So
it's the point in the day where there was the most trading at a certain price.
Exactly. So the open and the close tend to skew anchored VWAP because the biggest trade of the day is usually the opening print and the closing print. And this takes the average amount of volume at each price point and then it doesn't anchor, it gives you an average daily volume, average price of where all that volume is. So things tend to trend back to the anchored VWAP. And now he anchors it and he explains in the book how he picks what events to start his trend line and, how he uses the anchored VWAP over multiple time frames.
It's all bullshit.
Yeah, well, it's done very well for him. And it's to me, it's
I'm
been
totally
the biggest
kidding.
change.
I'm totally
I know.
That's why you didn't make the book.
I know.
Yeah.
So shout out to Brian.
Was that your blurb?
That was it. Crumpled up on the floor.
Wait, can I just, Dan, before we get to your favorite, this is just very interesting. This is a good illustration of how the markets work.
Yeah.
On Animal Spurs this week, Ben and I were talking about how people are eschewing DoorDash and companies like it because it's so
Is it
expensive.
eschewing or skewing?
I don't know. Did I say it right?
No, you said eschewing.
Okay, whatever.
Shooing.
It's so expensive. Like I spoke about how I tried to order something that was $43 and it ended up being $80, so I said absolutely not. In any event, DoorDash just reported and stock's up 13%.
Yeah, what do you know? And
Nice
Uber,
call.
and Uber Eats was great.
Yeah.
So
Chart
there
looks
are
good,
people
too.
that are
Your
lazy
chart
enough.
does look good.
Yeah.
There are people that are lazy enough that they will spend
Your
whatever.
boots on the ground research was worthless.
Yeah. Stick to charts.
So, real quick, the other thing, podcasts, I always listen to you every Wednesday morning.
Thanks,
so
brother.
I give you a shout out on Twitter when I like it. And if I don't say anything, just whatever. And the show I'm watching is embarrassing to admit I'm watching Game of Thrones. I was the one guy on the floor that didn't watch it as it premiered.
Doing the right thing.
Yeah, well, now I'm binging it. It's phenomenal. And then there's this show Shrinking with Harrison Ford and Jason Segel on
cute.
Apple Plus. It's very
cute.
cute. It's
Yeah.
like your therapist gets really involved in your life and will show up at your events. And
Are you watching this?
It's fantastic.
No, is he like too grumpy to watch now?
He's
Harrison?
always
Jason
grump-
Segel?
No.
Oh, he's barely in it.
Harrison Ford.
He's like a
Yeah, he's all right.
I find him tough these
He's not
days.
the main character.
I
so-
mean, I grew up.
Don't
with
just
Harrison
watch your
Ford,
mouth.
There's
but-
a new Indiana Jones. Did you see
Watch
that
your mouth.
commercial
Listen,
during the Super
I don't
Bowl?
think I'm gonna go.
I don't know how they're doing that, but
yes, you are.
yeah.
I really don't think I'm gonna go. I think I'll watch it on.
Oh,
on
did
streaming.
you guys see? Actually, hold on. Keep talking.
Yeah.
I need to find this.
And then the last thing, concerts. I used to follow you religiously at every concert you went to. You haven't?
out.
Did you go to Arcade Fire? That's your band.
No, I would love to have.
National. Well, they're
I
coming.
love the
National's coming
National.
August in
Where
New
are they
York.
playing? Are they
Madison
playing?
Square Garden.
I'll probably go to that.
I got an extra ticket. So
Do you?
Yeah, I do.
All right.
All right. We'll talk. And I was just wondering what you guys have been seeing because that used to be your thing.
No, I
and-
know. I stopped. You know why? It's just like the year in my life right now with my kid trying to get into college, and my son is now in 8th grade, and the amount of tutors and driving them to neither one of them drives. It's just so overwhelming
Yep.
that when Thursday or Friday night roll around, I'm not calling my boys like, "What are you up to?" I'm like, "Thank God, I'm just gonna go to sleep."
Yeah.
I just want to like put my phone down and like watch TV show, not spend money, not be in my car, not be coming or going. It's a phase.
Yeah.
I'll probably come back at some point, but that's just where I am right
No,
now.
and you got to
I
enjoy
hope
this.
it's not permanent.
Enjoy this time right now because they will be gone. And
Yeah, no, I know.
It's
It's hard to
crazy.
enjoy, but I understand
Yeah.
that it's very, very finite. But that's what's going on. Dan, what are your favorites?
Old
You and I are
guys.
sharing this one, I think.
Which one?
Tulsa King, bro.
I mean, the old guys are making a comeback.
It's good.
I love
It's
it.
good. I love it.
I love it so much.
Stallone's a mob guy. Goes away for 25 years.
Wait, why
comes
do you
out.
why do you love it?
I don't know, because he's Rocky.
I was
I feel
gonna
like
say the same
it's
thing.
kind of like you just grew up with it.
Would you like the show if it wasn't Stallone? It was somebody
I mean,
else.
It'd have to be somebody like De Niro or like
It's
somebody
sorry,
that just
it's an
fits
actor
the
you've
part.
never heard of.
No, probably not.
I probably don't think so either. I
don't
might
think
not
so.
have even tried it.
No,
But I love. So Rocky was like a
Yeah.
huge part of my childhood.
I think it's the year I was born.
Yeah.
76 or 77.
But like all of those movies, it was just like part of our childhood. It was like, oh, there's a new Rocky.
Agreed.
All right, he's really good on the show. He's actually acting.
What if it was
Oh, look
Vin
at this.
Diesel?
This is what I was looking for.
Vin Diesel is not comparable to Sylvester Stallone.
Look at this.
What is that?
That's Harrison Ford de-aged.
Wow.
How crazy is that?
Oh, that's weird.
It's unbelievable.
I mean,
That's like real AI.
Duncan, look at this.
Yeah, tweet that out.
That's pretty sick.
Hey, can you guys do that for me on YouTube?
Isn't that incredible?
Take 30
we'll
years
work
off
on
of
it.
Can you
me.
give me hair?
Wow.
And
Scary.
what's Breathe by Rickson Gracie?
It's all right. So about a year and a half ago, I started, I don't know, foolishly maybe, training jujitsu
Okay.
and kind of gotten really into it. And he, Rickson Gracie is part of the Gracie family, the kind of the family that put jujitsu on the map here in the U.S. when Royce Gracie beat the snot out of some WWF wrestler at the first UFC. So it's just kind of interesting reading about their life, how they kind of trained, how they grew up, and how they brought jiu-jitsu here. Kind of the key premise of the book is you have to get comfortable being uncomfortable, right?
Okay.
Jiu-jitsu, you're on the ground a lot. you're training against people who might be a lot bigger than you. So I was training last night with a guy who's got me by like 50 pounds, right? That guy gets on top of you. You can do one of two things. You can panic and you're going to get choked or armbarred and something bad's going to happen. Or you can kind of just be comfortable with it and figure it out. So, he kind of goes through his philosophy for dealing with hardship and through that lens. So
How long have you been doing it?
18 months.
Okay. Are you getting good?
It's hard to tell if you're
Are you
getting
surprising
good.
yourself?
Sometimes. It's hard to see your progress because you're kind of training with the same people all the time.
Okay.
And everybody's kind of progressing at the same pace. And what you tend to get from beginners is you get a lot of like kids in their early 20s just out of college. Like, you get in there with like the ex-D1 wrestler.
Yeah.
So you take your beatings, but then you have somebody who's only been doing it a month and you kind of manhandle them a little bit and you're kind of, all right, I'm kind of get this.
My friend Rappaport's been doing that for like 5 years.
It's so much fun.
And his whole Instagram feed is now like him like winning trophies or with the other guys in his group.
I'm contemplating competing.
Why? I mean, what's the worst that happens? You lose? You're not going to die.
Well, you tear your ACL.
I mean, you could get hurt, I guess.
McMurtry just got hurt doing jiu-jitsu.
But
Was he doing UFC? Was he like doing UFC or jiu-jitsu? I don't know.
I don't know.
I don't remember it being jiu-jitsu, but it was fighting something.
Yeah.
He was,
I don't want to get punched.
Why, is that a big part of it? I thought it was more like wrestling.
There isn't. That's the whole.
Yeah.
Jiu-jitsu is
But
grappling.
that's even
It's not
scarier.
like
striking.
accidentally like elbowed in the
No,
face.
but I would never do like UFC. They have
Right.
those UFC gyms
Of
all
course.
around us, right? And
Yeah.
I don't want anybody to hit me.
No, jiu-jitsu is
in the
wrestling.
face. It's basically wrestling.
Yeah.
So it's a lot of fun. I've
That
enjoyed
face
it.
is the moneymaker.
Not this one. It's got a face for radio.
Well, guys, we've had so much fun hanging with you two. I can't believe it took us this long to have either of you here, let alone getting you both on the same day. It was just absolutely awesome. So thank you so much for
Thank you
coming.
for having us.
I want to tell people where they could follow you and learn more about what you do. We'll start with you, Dan. Are you a tweeter?
I
You're a
am.
Twitter guy? Okay, what's
Sure.
your Twitter handle?
At Dan Russo _CMT.
At Dan Russo _CMT. Okay, and where do we learn more about Potomac Funds and some of the research that you were referencing before?
Head over to PotomacFund.com.
Potomac Fund?
Yep.
Not funds.
Fund. FUND.
PotomacFund.com.
Exactly.
Awesome. Jay Woods, where should we follow you?
Well,
I follow you everywhere.
You do. You can find me at the New York Stock Exchange. I'm in between things right
Most
now.
people can't get in.
No, well, you just,
Right.
you let me know, and I'll get you in. I bring your kids back. They came to see you on TV and they didn't even pay attention to you. It was fantastic.
100%.
But I'm at Twitter at JWoods3. You can follow me at LinkedIn, JWoodsCMT.
You're on Instagram. We follow each other.
Who's Jay Woods
Instagram. What's that?
Who's Jay Woods 2?
I don't know
Let's
who Jay
eliminate
Woods.
him.
Jay Woods 1, 2, 3. I just grabbed 3 because it's my number, and it went well. But I'll have a big announcement in the next few weeks about a career change, and I'm looking forward to sharing that. I'll do it on
for you.
Twitter too.
Good for you. You guys are awesome. Thank you so much for coming
Thanks for
out and
having us.
hanging out with me. I wanted to announce that next week,
Oh, yeah. We're
the
done.
compound is on vacation. Like everybody. John's, where you going? Belgium? France and Belgium?
Nice.
Okay.
Duncan, what about you?
Duncan's going to North
I'm
Carolina.
running a 5K in Wilmington, North Carolina.
Nice.
Look at that. Where are you going? Hi, how are you?
Oh.
Where are you going?
Disney.
All right.
Wait,
Disney.
I thought next week somebody was fixing up the conference.
Ah!
They have 5Ks here
That's not
too.
next
You know,
week?
Duncan.
I do a lot of
That's
that.
not next week?
Shh. I'm having a staycation next week. We're going to take my daughter to look at some colleges.
Nice.
So,
All right.
good enough. But we're giving everybody, I don't know if Nicole's doing anything. We're giving everyone the week off, so don't look for the shows next week, but I promise we are coming back hard the following week. We will miss you guys too much. Thank you so much for listening. Have an awesome weekend and week.